All right, so ready to jump into the world of NetEase. Let's do a deep dive into their 2023 performance and figure out where this company's going next. We're mainly using their 2023 annual report as our guide here, but we've also got some juicy bits from employee agreements and corporate governance docs to spice things up.
Oh, yeah. Those always add an interesting layer, don't they?
Definitely. Gives us a better sense of the company culture.
Absolutely. And I think what you'll find interesting is just how much NetEase is branching out. I mean, most people think games, right? But they've got a lot more going on.
Okay, so let's break down these different parts of their business.
Sure. So obviously there's the huge gaming side, but then you've got UDAO, which is all about intelligent learning, and NetEase Cloud Music, their music streaming platform. And then they have this category called Innovative Businesses and Others, which is kind of a catch-all for things like e-commerce, their payment platform, NetEase Pay, and even email services.
Wow, that's quite a mix. So they're not putting all their eggs in one basket, that's for sure.
Nope, definitely not. They're spreading out, trying different things, which, has its pros and cons.
Right, right. Let's start with UDAO. I was reading that they had to make a big shift away from after-school tutoring because of those regulatory changes in China, remember?
Oh, yeah, that was a big deal. A lot of companies were affected by that.
So how did NetEase handle it?
Well, instead of just backing down, they went full force into AI-powered learning products. Think smart learning devices, educational software, online courses for adults, that kind of thing.
Interesting. So they basically turned a challenge into an opportunity.
That's one way to look at it. I mean, they were forced to change direction, but they found a new path.
And it seems like a pretty smart move, considering how much the edtech market is growing.
Yeah, I think they're well positioned to capitalize on that, especially if they can really make those AI-powered tools work well.
Okay, makes sense. Now, what about NetEase Cloud Music? How are they doing against the big players like Tencent in the music streaming market?
It's a tough battle, that's for sure. Tencent's got a huge user base, a lot of market share.
So how is NetEase trying to compete?
Well, they're focusing on a few key things. One is independent artists. They're giving them more of a platform. And then they're also really emphasizing personalized user experience, trying to make it feel more tailored to individual tastes.
Interesting. So it's not just about having the biggest library of songs.
Right. It's about making it a better experience overall. They're also investing a lot in podcasts and other audio content, trying to broaden their appeal that way.
So it sounds like they're trying to create their own niche within the market.
Exactly. They're playing to their strengths, which makes sense.
Makes sense. Now, what about this innovative businesses and others category? It seems kind of mysterious. What's driving growth there?
It's a bit of a mixed bag, but e-commerce seems to be a big factor. They've got their own online shopping platforms, plus they're partnering with other retailers. And then there's NetEase Pay, their payment platform, which is gaining traction.
So they're really weaving all these different businesses together.
Yeah, it's kind of like a web, right?
It is. It makes you wonder if that's a good thing or a bad thing in the long run, though.
That's the big question. Is it too much? Or is it a smart way to diversify? We'll have to see.
Okay, so lots to think about there. Let's shift gears a bit and talk about their actual financial performance in 2023. Their annual report showed a 7.2% increase in total revenue, hitting 103.5 billion RMB. So pretty impressive.
Yeah, that's not bad at all.
And when we look at it by segment, games and related value-added services are still the biggest chunk.
Around 79%, I think.
Right, right. But the interesting thing is that the innovative businesses and others segment had the biggest growth.
Which makes sense given what we were just talking about with e-commerce and their payment platform taking off.
Yeah, totally. Now, let's dig a little deeper into their financial statements. Their cost of revenues actually went down in 2023, but their operating expenses went up.
So what's going on there?
Yeah, what's the story?
Well, the lower cost of revenues could be from a bunch of things. Maybe they got better deals with suppliers, or they're creating content more efficiently.
Okay, so more bang for their buck.
Exactly. But the higher operating expenses, that's likely because they're investing heavily in research and development, AI, machine learning, that kind of stuff.
So they're spending money to make money, basically.
Pretty much. They're playing the long game.
And it's a smart move, if you ask me.
Oh, absolutely. The tech world moves so fast, you gotta stay ahead of the curve.
Totally. And there's another interesting detail in their financial statements. Their royalty fees and revenue sharing costs went down.
Oh, yeah. That's interesting. What do you make of that?
Well, it could mean they're taking more control over their content creation.
So instead of relying on licensed stuff, they're making more of their own.
Exactly. Which could mean higher profit margins down the line.
Makes sense. So they're diversifying, investing in R&D, and taking more control over their content.
Sounds like they're setting themselves up for a good future.
It seems that way.
But what about their shareholders? Are they getting anything out of this right now?
Well, NetEase is definitely trying to reward them. They've been paying out dividends like US E104 650 sows per American depositary share in Q1 2023.
Okay, not bad.
And they also announced a huge new share repurchase program worth up to $5 billion US dollars.
Wow, that's a lot of money.
It is. But of course, some people might say that share buybacks are just a way to pump up the stock price instead of actually investing in long-term growth.
Right, right. So it's a balancing act.
Exactly. It's all about finding the right balance between short-term gains and long-term value.
Absolutely. Okay, so we've talked about their different business areas, their financials, but there's another big piece of the puzzle we need to consider, the regulatory landscape in China.
Ah, yes. That's a big one.
It could have a huge impact on a company like NetEase.
No doubt about it.
So let's dive into that next.
Sounds good to me.
All right, so we were talking about the regulatory landscape in China, which can be a bit of a minefield for companies like NetEase. What are some of the specific things we need to be aware of?
Well, there's the Holding Foreign Companies Accountable Act, the HFCAA, passed in the U.S. This one's a bit tricky because it basically says that Chinese companies listed on U.S. exchanges need to follow U.S. auditing rules, or they could get delisted.
So it's adding more pressure on companies like NetEase, who are listed in both places.
Exactly. It creates uncertainty, which investors never like.
Right. And I remember it was a big deal a while back. Lots of talk about potential delistings.
Yeah, it caused a lot of turmoil in the market. Things have calmed down a bit recently, though, with U.S. regulators now able to do some inspections in China. But the risk isn't completely gone. It's something to keep an eye on for sure.
And it sounds like they're walking a tightrope. And then there's the whole VIE structure thing, which we talked about a bit earlier. Can you remind us how that works and what the potential risks are?
Sure. VIE stands for Variable Interest Entity. And it's basically a workaround for foreign investors who want to put money into industries in China where they're normally not allowed.
Like tech and internet, right?
Exactly.
Yeah.
So what they do is set up an offshore entity, often in the Cayman Islands or somewhere similar, and then use contracts to control the actual operations in China.
Okay, so it's a way to get around the rules.
In a way, yes. But the problem is it's all based on those contracts.
So if the Chinese government decides to change the rules or challenge the legality of VIEs, those foreign investors could be left high and dry.
That's the risk. It's a bit of a legal gray area, and it adds another layer of uncertainty for investors.
I see. And of course, we can't forget about the specific regulations around online gaming in China. They've got all those rules about gaming time for kids and what kind of content is allowed.
Yeah, those have been a big focus for regulators.
So how has NetEase adapted to all that?
They've had to be very proactive. They've put in age verification systems, playtime limits, that sort of thing. And they're also being very careful about the content in their games, avoiding anything that might be politically sensitive or controversial.
So it's a constant balancing act, trying to stay on the right side of the regulations while still making games that people want to play.
It definitely is. It's a challenge for any gaming company operating in China.
Okay, so we've got these regulatory challenges in China, but at the same time, NetEase is looking to expand globally. They've got partnerships with companies like Blizzard and Microsoft.
Right.
So how do those global ambitions fit into this whole regulatory picture?
It's an interesting question. On one hand, going global could help them diversify their revenue so they're not so reliant on the Chinese market.
And they can tap into new audiences?
Exactly. But on the other hand, it opens them up to a whole new set of risks.
Like,
Well, geopolitical tensions, for one. We're seeing more and more trade wars, sanctions, that kind of thing. And there could also be restrictions on data transfer, technology exports, things like that.
so it's a trade-off. More potential, but also more risk.
Exactly. They'll need to be smart about it. Choose the right partners, target the right markets, be ready to adapt.
Sounds like a delicate balancing act. Speaking of balancing acts, let's go back to those financial statements for a minute. We talk about their revenue growth and their investments in R&D, but what about some of the other key metrics, like their income statement, balance sheet, cash flow, that kind of thing?
Yeah, let's take a closer look. So on their income statement for 2023, we see that their operating expenses were 35.4 billion RMB. And as we mentioned before, a big chunk of that went to R&D. But even with those expenses, their net income was still a healthy 22.8 billion RMB.
So they're making a profit, which is always good.
Absolutely.
Yeah.
And their balance sheet at the end of 2023 looks pretty good too. They had a strong cash position, 21.4 billion RMB and over 100 billion RMB in time deposits.
Wow, so they've got a lot of cash on hand.
Yeah, which gives them a lot of flexibility. They can weather economic storms, make acquisitions, invest in new projects, that sort of thing.
Okay, that's good to know. What about their cash flow statement? What does that tell us?
It shows they generated 35.3 billion RMB in cash from operations in 2023, which means they're not just profitable on paper, they're actually bringing in a lot of cash.
And that cash can then be used to fund their growth, pay dividends, buy back shares, all those good things.
Exactly. And speaking of cash flow, let's not forget about free cash flow.
Which is basically the cash they have left over after paying for operating expenses and capital expenditures.
Right. It's the cash they can use for all those things we just mentioned, reinvesting in the business, paying dividends, reducing debt, even making acquisitions.
So it's a pretty important metric,
Very important. And in NetEase's case, their free cash flow is quite strong.
which is a good sign.
Definitely. It shows they're managing their finances well and generating a lot of cash from their core operations.
Okay, so we've looked at their different businesses, their financial performance, the regulatory challenges they face. What does it all add up to? What's your overall assessment of NetEase moving forward?
Well, that's the million-dollar question, isn't it? It's tough to say for sure. I mean, there are definitely some positives, some things working in their favor.
Like what?
Well, for one, their diversification strategy seems to be paying off, even though it's risky.
Right. Not putting all their eggs in one basket.
Exactly. And they're not afraid to innovate, try new things. We saw that with Youdao pivoting away from after-school tutoring.
And their big investments in AI,
Yeah, all that points to a company that's willing to adapt, to change with the times.
which is crucial in today's world.
Absolutely. And then, of course, you've got their financials, which are solid. They've got the cash flow to weather storms, so to speak.
But you said it's tough to say for sure. What are the downsides, the potential risks?
Well, the regulatory environment in China is always a concern. It's unpredictable, things can change quickly.
And those changes can have a big impact on a company like NetEase.
Oh, for sure. And then there's the whole VIE structure issue. It's a common structure, but it's not without its risks.
Right, right. And going global, while it has its advantages,
Yeah.
also comes with a whole new set of challenges.
Definitely. More competition, different cultural norms, geopolitical risks. It's a lot to navigate.
So it sounds like their success will depend on their ability to adapt, to be strategic, to make the right decisions in a very complex environment.
That's the key. They need to be smart, agile, and maybe a little bit lucky.
So let's say someone's listening to this and thinking about investing in NetEase. What are the key takeaways they should keep in mind? What are the big things to consider?
Okay, well, first off, I'd say don't just think of them as a gaming company. There's
Right.
so much more than that.
Right, they've got their fingers in a lot of pies.
They do.
Yeah.
And that diversification could be a big strength in the long run.
And secondly,
Their financial strength, they're in a good position financially. They've got cash reserves, strong cash flow.
that's a good foundation to build on.
It is. And third, watch how they approach innovation. Are they staying ahead of the curve? Are they investing in the right technologies?
That's a good indicator of whether they'll be able to compete in the future.
Exactly. And then finally, don't forget about those regulatory and geopolitical risks.
Always keep those in the back of your mind.
They're always there, lurking in the background. They can have a huge impact on a company's performance, especially a global company like NetEase.
Okay, so lots to think about. It sounds like NetEase is a company with a lot of potential, but also some potential pitfalls.
That's a good way to put it. It's a fascinating company to watch, and it'll be interesting to see how they navigate the years ahead.
Well, I think we've given our listeners a lot to chew on today. We've gone deep into their business, their financials, the challenges they face.
It's been a great discussion.
I agree. It's amazing to see how much one company can touch so many different aspects of the tech and entertainment industries.
It really is. And it shows you how interconnected everything is these days.
Totally. Well, on that note, I think we'll wrap up this deep dive into NetEase. Thanks for joining us on this journey, and we hope you'll keep exploring the world of business with us. Until next time, stay curious and keep learning.